Hi there, a very good morning, good afternoon to all of you, depending on wherever you are hearing me and watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to the markets, and I'm going to discuss about the Nifty, small cap, mid cap indices, US indices, gold, Bitcoin, everything in this video. So let's get started. First of all, a disclaimer: this is not a stock recommendation, and I'm not a member of the NSE and BSC. I'm not a portfolio advisor. Whatever I discuss is purely on the basis of my experience into the market over the last 10, 12 years as an investor, as a trader. And so, whatever decisions you take with respect to investing, trading, do consult your financial advisor before doing that. Uh, Before I talk about the markets, a small request: kindly support me on Patreon, WhatsApp, or on YouTube. Hit that join button. You'll get access to my portfolio watch list, and whatever queries you're having, I'll be more than happy to answer that. I have discussions on global and local economies on that as well. So let's just quickly jump into the markets, and for that, let me take you to the TradingView website. And here we have everything in here. So let's just discuss about the markets first. So we'll discuss about. Let me just open up all the indices. So here we have all the indices. So from Bitcoin to mid cap, small cap to gold and all. So first the Indian indices. Let's discuss that because this has been a number of days since we discussed that. So let me just take out Nifty. 24,850 is where the Nifty is currently. We went to 24,400 levels, 24,460, which was closer to or just below the 20-day moving average, and then we recovered from that. So there was some support at the 20-day moving average, but I have a feeling that we are in for a decline on the indices. A better understanding of it would be here. So if you look at Nifty, uh, so it's around 24,500 is where the Nifty, you can say, 20 DMA is, 20-day exponential moving average. It went there on 22nd of May and has recovered. Now, how are the valuations first of all? So currently the EPS for the year that came out was around 1117 rupees or so. And we are at 24,900, let's say. We touched 24,900, we came back from there. So in terms of this, so 24,900 on 1117 rupees, we are at 22.3 times now, largely at around 22.3 times or so. The market should go up, not go down. So if I take out on valuations chart of Nifty, ending, so let me take that out. We'll spend some time here on that. So if you look at it, 22.4 times is where Nifty is trading at, in my opinion, 22.3 times. But that's how the market is. So if you look at a 5-year average for the Nifty in terms of the P, let me take out the P average. It's around 22.6 times. So it's right there on a 5-year average basis. It's not ultra cheap, it's not expensive, it's right about there. Probably it can go up another 200-300 points and then fall in. That is probably why 25,500 is becoming such a difficult level to pass. On a 10-year average basis, we are still cheap on a 10-year average, but you need to understand that during the pandemic, this is how the market valuations went. And this is actually a outlier kind of a situation because many of the Nifty stocks produced negative results during that 2-year period, 1.5 year period. So what I take into effect is a 5-year average, and that's around 22.6. We are right there. So there is an equal chance of the Nifty going up as well as down here, literally. And I have a feeling that the way the market is behaving, uh, normally market peaks out at 24 and a half times, but those levels might not come in so quickly. There could be some decline first, and then the market may go up. So if you look at the charts again, we went to 20 DMA. If there is any sense, so what has happened is the global markets and US markets fell. So if you look at here, the Nasdaq fell by around 1%. In fact, the Nasdaq was down more than a percent intraday. The Dow Jones fell more than half a percent, was down even more, but tried to recover. And if you look at it right at the 20 DMAs where the Dow Jones is, Nasdaq per se is up and has given substantial returns over the last month and a half or so. So there is a possibility of Nasdaq going down from here all the way to 20,100. So a good 4%, 3-4% decline is possible on the US indices. Similar decline is possible in here. Dow Jones hasn't performed that well. So uh, even in S&P 500 we are close to the 20-day moving average. We touched that, we came back. So literally it's mirroring what the Nifty is doing, or Nifty is mirroring what US is doing. So any fall in the US indices towards the 50 DMA will trigger a fall in here. That's what it seems like. And that you have the 50-day moving average at around 24,000. So there is a clear sign of the Nifty going to even the 200 DMA, which is not far off, which is at 23,600. And there has always been, nearly always been, a retracement of either a stock or a index from a critical level. When it goes up, it comes back to the similar level. So it went up sharply from 7th of April, just went through the roof at the 200 DMA with a gap up. So you look at it here, we were at around 22,800. We were at 22,800. The 200 DMA was at 23,300, and then we opened higher the next day on 15th of April. We opened at 23,368, and just we didn't look back. So we were well above the 200 DMA all throughout. And so there is a very good chance that in the next 1 month, next 2-3 weeks, we could again retrace those levels of 23,700 or so. So 1,000 to 1,200 point decline, which is very much possible. A simple 1,100 point correction on such a high base for Nifty is very much a possibility. So that's a 4.5% correction. So 4 to 5% correction on the Nifty is very much possible. And that is why I feel that if you're looking to buy into stocks, if you have some cash, wait it out. Let's see how this behaves. The way the chart is behaving is similar to, if you look closely, the way the chart has behaved between 24th of March all the way to 4th of April. And although there was a collapse after that, but we could see such kind of correction, like from 23,900 the market fell all the way to 22,900. A 1,000 point correction happened here. A 1,000 point correction from current levels is very much possible, closer to going towards, I would say, the 200 DMA. Closer to it, may not breaching it, but going closer to it. And similar is my view on the Nifty mid cap 100. If you look at it, it has done well. It has done well over the last 4-5 days, and this. But you look at this selling on 20th of May from 57,450. It fell, and it is trying to reach that. Probably it will go there and then again fall. But this kind of selling leads to further selling later on. So this is exactly what happened around here. So a major selling, then some consolidation, exactly what is happening, and then another round of selling. Let's take that out. Okay, if this doesn't happen, then we went to 50,300 from around 53,000. So again a correction of around 3,000 points from around 50,300, around 6% on the index. So 6-7% could be lost on mid cap. And similarly, if you look at the BSE small cap, a similar sort of story pans out, that you have a situation where index per se again is showing similar rain, but here the 200 DMA is around 49,500. We are at 51,500, so above it, but there's a good chance that will fall. A similar kind of chart pattern is standing here. And in this case of on small caps, we have already had RSI going towards 70, which is slightly stretched levels with the way the index have come back from around 45,000. So if I look at it from here, from around 41,000, the index has went in about 6 weeks from 41,000 has gone to 51,000, 25% nearly. That's around 11,000 points in this period. So around 26% move on the index from the lows of 7th of April, outrageous. And that is why I feel that there is a fall, there is a very decent fall around the corner that awaits us. And in fact, if you look at the BSC small cap, if I look at the BSC small cap, trading at 32 times its earnings. Earnings have come through on a PE basis, trading at 32 times. Normally, on a 10-year basis, the average has been 42. That's okay. That's because of this spike that we saw time. But on a 5-year basis, the average is around 33. We are trading at 32. So it's not cheap. It's not ultra cheap like it was in, say, March of 23, when it fell to around 23 times, around 22 times, 21, 22 times, or even during the fall of March 2025 when we fell to around 26 times. So there is a chance 2-3% upside is very much possible. We could go to 53,000 on the small cap index. I'm talking about this because most of us are invested into smaller companies, but then there could be a decent fall, and when a fall comes in small caps, then it happens big. It happens 5-7% in a day on the index. And so what I feel is that a fall awaits us here as well on the small cap index, and that fall could take us down all the way to 46,000 even, which is a good 15% decline. But a 6-7% fall is very much possible, which will again take us to the 50 DMA, which is around 48,000. So around 48,000 is a possibility on the small cap index as well, which will also, you can say, nullify the kind of effect that we have had on the RSI. So that would also cool down a bit. So in my opinion, I have talked about a decline very less in my videos, but here there's a very good possibility that the markets would fall even further from here. So this is about the Indian markets. Let me just give you an idea of the Bitcoin, etc. Bitcoin hit its high, and we were talking about it, the way Bitcoin was behaving, that there was a possibility of an upsurge going forward, and that has happened. And now I feel that this year for Bitcoin could be big. I don't know about the altcoins, but Bitcoin since 2021 December was big, 2017 December was big, 25 December, 26 Jan, Feb, all this kind of a period could be big. I won't be surprised if Bitcoin doubles from here over the next 6 months, 7 months. That is the kind of move this kind of asset class shows, and probably after that we could have a 40-50% fall from those levels. So I feel that we are headed to 220 to 30,000, 230,000 on the Bitcoin over the next 6-8 months, maybe, if there is a huge bull rally that happens here in BTC. So that's my opinion. If somebody is invested, Dow Jones headed lower. It is looking not quite good for the Dow after 19th of May, 20th of May, when it made a high of around 42,800. It has already fallen 4% from there. Sorry, 2-3% from there. And I have a feeling that this is just the beginning of a decent correction in Dow and S&P, and you can say Nasdaq. S&P 500 again touching that 20 DMA may just hit. I mean, the 50-day moving average is at 5773. That's sorry, 200-day moving average is at 5773. That is where the S&P 500 went. So there could be a major correction coming in place for the US indices of around 5-7% at least over the next few weeks. Maybe even 10 to 12% correction is possible, and Nasdaq has done the best over this period. I still feel Nasdaq, once 20,500 goes on Nasdaq, then we are going to see another round of selling, maybe to levels closer to 19,500 also, and then a recovery. So I won't say that the US market is in danger of a major huge correction of 20% or so, but yes, a 5 to 8% correction is very much possible, and then an upside in those indices as well. And just to give you an idea of gold, trading at 33.57 at the moment, so gold is inching up again, and that just signals the kind of you can say uncertainty there is with the bond yields increasing in US, and the kind of you can say response bonds US bonds has faced. We are seeing that gold is again inching up from those levels of around 3100 uh, on gold. So we could see gold hitting highs and then coming back. So 3500 is possible on gold in terms of dollars here. So this is about the markets. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thank you.